Hello, warm welcome. You're watching the fresh episode of Your Trades on ET Now. This is Priyanka Uppal. We track next 20 minutes. We get you the key highlights of the day, then we set you up for tomorrow, the key brokerage notes, and the big top stories for the day. But clearly, the story lies with banks today, Ankita.
Absolutely.
Private banks, especially Axis Bank, HDFC Bank, Indices Bank. There was a note by Bernstein on financials wherein they have given outperform rating on a couple of stocks, and those stocks have fairly reacted to the note also looks like. But then another record level for Bank Nifty, wherein the index crossed 51,000 for the first time. This was 51,400 precisely. The rally was led by private banks, clearly like Axis Bank, HDFC Bank, both were up by 3%. ICICI Bank was up 2%. Indices Bank close to 2%. Bernstein on their note also mentioned about a lot of financial space, not just private banks, but also other financials like Bajaj Finance and Manappuram Finance. There they had also given an outperform rating. That one actually looks like Street factored in that also in today's rally. Looks like there should be an FI buying today as they heavily covered their short position last week itself from 3.5 contracts on index. The short positions for FIs were barely 35,000. This is one reason. We have reasons for FIs to be bullish on the index, on the stocks, and a clear example could be that did they buy banks today. Standout gainers were clearly chemical and fertilizer stocks again, with stocks like RCF, Chambal standing tall today, gaining more than 5% during the day today. In fact, if you remember, Ankita, last week also there was a note by Goldman Sachs also, and they mentioned, and there have been a couple of reports since the start of this year, that the private banks are being preferred over the public sector banks. And today what we saw was a clear example of that. What else did you make out of the market?
Absolutely, Priyanka. In fact, weekly option expiry and Nifty Bank are the top gainers.
Yeah.
In fact,
Nifty also
Nifty also scaled, but the fact is that we ended the day rather flat on those. We did see profit booking coming in there, but Nifty Bank, however, was shining away in trade. But a couple of other names that were in focus today was one, of course, was SBI, because it has announced plans to raise up to 20,000 crore rupees in the current fiscal by issuing long-term bonds, and the fundraising is likely to be executed through either a public issue or a private placement. Also, of course, we did see Vodafone Idea and Bharti Airtel and Indus Tower in focus today. Why? Because shortly after it reported that the UK's Vodafone Group has sold as much as 20% shareholding in the Indus Tower company, Bharti Airtel also came out and said that they have acquired 1% additional equity in Indus Towers, and they said that they've bought almost 2.7 crore shares in Indus Towers via block deals. And before this, Bharti Airtel was holding 47.9% equity stake in Indus Towers. So Indus Towers, Bharti Airtel and Vodafone Idea, all three of them were in focus today. And of course, like Priyanka mentioned, the fertilizer stocks were in focus today. GST Council meet is scheduled for this Saturday, that is 22nd of June, and the Council is expected to discuss relief for the fertilizer sector. Now, the current GST on fertilizer is 5%, and if the committee has proposed to exempt fertilizers from GST, and it's a big positive coming in for the domestic fertilizer companies, and in the back of that, like she mentioned, RCF, National Fertilizers, Chambal Fertilizers were all in focus today. So those were the stocks that were in focus today, but we'll move on, Priyanka, then.
Yeah, Ruchit Jain is there with us to get us more on the technical front. Ruchit, this move was largely anticipated also, that would we see now FIs coming back, because they've largely covered their short position, and the kind of new high we saw on Bank Nifty and Nifty was a clear example. What do you make of the market? Was it an expiry move, FIs covering their short position? That's one thing, or further built-up is also being seen? What is the data looking like? What is your view now on index at the moment?
Yeah, hi, very good afternoon, Priyanka. Well, if we look at the positions, then I think most of the positions which were formed before the election event have been squared off. Just before the event, we had witnessed that FIs were short on index futures, where the long-short ratio even went to as low as 13%. But now the short positions have been covered, and the long-short ratio is back to around 49%. Client section, which includes retail traders and HNIs, they had long short ratio of around 67%, and they have also unwound some of those long positions, and their ratio is around 51-52%. So this clearly indicates that the most of the positions which were formed before the event have been gradually covered, and both the long short ratio of the market participants are now hovering around that 50% mark. So in which direction fresh positions will be formed, I think that will determine the near term move in the market. But clearly what we witnessed today, there's those sectors or stocks which had seen a good run up after that event have started witnessing some profit booking, since a very sharp move has been seen in a short period of time. And sectors which have underperformed, or where the risk reward ratio, rather I wouldn't say underperformed, but rather where the risk reward ratio was a bit favorable, was the banking space, because Bank Nifty was yet to make a new high, whereas most of the other indices had already made a new record high. So I think that's why the risk reward ratio was more favorable in the banking space, and we have witnessed some good buying interest over there. Quite possible what you mentioned about the FIIs returning in the cash segment buying figures. In case if we see such buying figures in today's trading session, which will come in the evening, then I think there would be an indication that some good buying interest has been seen by them. But clearly, the markets today has given a conclusion that the high beta names which had already seen a rally, it's better to make some shift in the portfolios and look for stocks where the movement has not yet been seen and the risk reward ratio is favorable. Apart from banking, I'd also highlight that IT may be next sector where some good momentum could be seen, because IT is also one space where we had not seen any significant high returns in the past. So banking, IT, I think these are two sectors which would keep the momentum intact.
All right, Ruchit, banking and IT is what you're saying will keep the momentum intact. But what are your picks in this market? Are they from the banking pack or the IT pack?
So one would be from the banking pack, which is SBI. Today, all the heavyweights were in momentum, and I think SBI also has seen a high top, high bottom structure of late. No, recently post the results, also good buying interest was seen in the stock. So I think the risk reward ratio is still favorable in this stock, where the downside seems to be very limited. So I think if one is looking for taking fresh exposure in the banking names, we are even positive on the private sector heavyweights. But within the PSU, SBI could participate with, one can go long with stop loss below 832, expecting near-term targets of 885. And one insurance stock is bucking the trend, that is ICICI General Insurance. So if you look at all the insurance stocks, then this is one stock which has made a 52 big high in spite of the recent corrective phase or underperformance in most of the insurance stocks. So the relative outperformer when the entire sector was correcting is a very good sign. Today, in fact, not only in today's trading session, but last 3 trading sessions, the volumes have been quite good in the stock. So I think this is one stock where one can expect a continuation of the uptrend. ICICI Lombard could be bought from a trading perspective with stock below 1700, expecting near-term targets around 1840.
It's a Lombard insurance space where clearly a lot of interest lies. And second stock you've given is SBI, which is also set to raise some 20,000 crore while long-term bonds. Both the stocks appear good and in an upward trajectory to Ruchit on the charts. Thank you, Ruchit, for both the recommendations in your view. Now we have Srishti joining in. Let's see what Srishti has find out. Srishti, what are you going to highlight both on the breakout side, but then market did tone down a little at the close. So is it a combination of stocks that you're sharing?
Well, yes, Priyanka, 2 counters. One is on the breakout side and the other one is on the breakdown side. Firstly, the banking counters were on the roll, and one of the underperformers in the banking space has been Bandhan Bank. It was quite interesting to say that during the day, the stock did manage to move above its crucial resistance of 200 odd rupees. If we see, then 200 has been quite a crucial level and a resistance for Bandhan Bank, and the stock is now seen to be continuing in uptrend, taking a support at its 20-day moving average, and hence we are highlighting this counter as one of the breakout stocks for today. Moving on to the other counter, and that's actually a breakdown stock. If we talk about Hindalco, then it did close the day at the day's lowest point. Other than that, it was a rejection candle exactly at its 20-day moving average. If you will see on the charts, the stock has been in a continuous uptrend from the price of rupees 500 or so, and the stock has moved up close to 700 rupees and now seem to be retracing back a little. If we talk about the build-up today, then there were shorts getting added for Hindalco today. So kind of a breakdown is what we have spotted on Hindalco. So these are the 2 stocks on the technical front. Back to you.
All right, Srishti, thank you so much for joining us with the technicals. But moving on to the word from the wise, India is set to grow further from the current point, and top market voices and experts sound their views on India's growth roadmap ahead. Let's go cross and listen in.
We see the momentum is well sustained, and we are therefore quite sanguine and quite optimistic that the projection which we have given for the first quarter of this year, 7.3%, we are quite optimistic that it will indeed be 7.3%. And there is no reason why the momentum will slow down. That's the first point. So the momentum of economic activity continues to be strong.
This is going to be one of the best possible year as far as the economic growth of the economy is concerned. And our expectation is that the macro growth should be somewhere in the range of 7.5 to about 8. And if at all that is the kind of a situation, I think around 14-15% kind of a growth should be a reality.
The first rung is your next 8 or 9 years of growth, when I believe you will double. So if you grow at 9, the next 8 year you will double your size of the economy. So from 4.25, 4 in that region, we should go to 8.5, 9. I think reasonably so within the next 8-9 years. Bye.
The bull market probably has ways to go, and the top classic signs that we see in a bull market are probably not gathered at this time yet.
It's been a rotational bull market, so it's not like everything has participated at the same time. So as one sector goes up, something else doesn't perform, and then it rotates into that. And we are playing a classical, what I call emerging market growth paradigm.
We turned a few years ago, and we've been in a secular bull market, and I don't think that's changing. There will be ups and downs, there'll be corrections along the way, there'll be volatility, but I think it's a very firm secular bull market, and one should not be too cheeky and call the end too early.
All right, so we got to some of the highlights on the sidelines of 18th 15th anniversary, wherein the major of the market stalwarts believe that growth to remain above 7%, and we are in a secular bull run. But let's get to what were the reasons for Bank Nifty scaling high today. Bank Nifty was rallying in trade today. It hit a fresh record high also. What are the factors that are driving this rally? Ajay gathers it all for us. Ajay, over to you.
I was putting some data together. If I look at the Bank Nifty, on a 6-month basis, on a year-till-date basis, if you can fire that way, 1-year basis, 3-year basis, Nifty banks have actually underperformed the Nifty. And that has been a case because these are the bulk of it actually owned by FIIs. And FIIs have been big sellers for a very long period of time. And in the meantime, while the underperformance was happening, these banks are trading at very fair valuation. Bulk of the bank is actually trading just around their average valuation. So there is a very strong case that Bank Nifty is breaking out. Today's move is, if you look at it, post the 3rd June fall, we saw equally large move. But entire market is moving. Today, Nifty, Sensex are flat. Small and mid cap is witnessing profit taking. But not only of the 51K, we are knocking at 52K as far as Bank Nifty is concerned. I was looking at the valuations, fair valuations. Ownership has got corrected from the FII side, over-owned, now they become fairly owned. Nobody is going gangbusters on banks yet. Look at the GDP upgrade which have come in, right? From the RBI side in the last 1 week, Fitch, Moody's, everybody has upgraded the GDP growth. NPAs are under check. Growth is very reasonable out there. So now the street is, kind of going or gravitating towards a space where, unlike, say, parts of defense, parts of power, parts of PSUs, which are massively stretched on valuation, people are finding comfort in banks.
And well, keeping with the banking space then, some important updates. Private lender Federal Bank has launched the RuPay Wave credit card. The bank has collaborated with the National Payments Corporation of India with a bid to transform customer transaction experiences with conveniences and rewards. The offering will integrate the benefits and features of RuPay credit cards with the experience of UPI payments. The first benefits of customers include no joining fees, a 10% cashback on the first 5 UPI transactions made using the Wave credit card, and 100 bonus reward points on quarterly spends of 50,000 rupees.
All right, we'll stay for a short break here. More to come on the other side of the break. We'll get you all the action from the derivative space. Don't go anywhere. Welcome back. You're watching Your Trades, and now more on the derivative side. Clearly, there was a long build-up which was seen in major of the bank stocks, especially the private side of the banks, Axis Bank, Indices Bank, Federal Bank, ICICI Bank, and of course some of the fertilizer counter. These were the top F&O gainers where maximum of the long build-up was seen, and there was a short covering move on many of the sugar stocks, Balrampur Chini, even stocks from the insurance space like ICICI Lombard. Talking more on about the strikes which were in active today, where maximum of the call writing action was seen was on 23,600 call, 23,700 call. Now this seems to be a resistance because we did close below this, but support has also risen. There was a mild put buying in 23,500, but 23,400 seems to be a greater support because there the maximum of the put writing was seen. So the range looks like between 23,400, which is at the base, and maybe 23,600, 700, where maximum of the call writing is seen. So that appears to be the immediate resistance now. But a lot of action in F&O sense, Ankita, in bank stock, sugar stocks, and couple of pharma names also.
Absolutely, Priyanka. So that was the derivatives scorecard. But let's move on to another set of stocks that were abuzz in trade, the fertilizer pack, and it was on the back of the fact that the GST Council meet is scheduled for this Saturday, that is 22nd of June, where the Council is expected to discuss relief for the fertilizer sector. To get you more details, we are joined by my colleague Sumit. Over to you, Sumit.
Well, just to begin with, the GST Council meeting is on Saturday, the June 22nd. But yes, relief likely for fertilizer sector because the Fitment Committee has recommended to GOM on rate rationalization to bring down GST on fertilizer from the current 5%. That's one important aspect there. Currently, the fertilizer GST is 5%, and the Fitment Committee has recommended to bring it down. However, the final call is yet to be taken. Also, certain other issues will be discussed in the meeting over the weekend. There will be this clarification on tobacco products, cigarettes, BD, smokeless tobacco. Also, online gaming could get relief because of 20% GST which was implemented. That can be reviewed as well. That's another thing. But main issue is of fertilizer. Industry has been demanding 5% duty reduction from the last many GST meetings, and this time the Fitment Committee has recommended to GOM to bring down from 5%. So these all things could be happening over the next few days, and the final decision will be possible to see only on the weekend on Saturday, June 22nd.
Right, so we'll have to wait till 22nd June, but the fertilizer counter seems to be in action since last week only. Thanks very much, Sumit, for all those details. But then let's get you towards agriculture space, that what is building up there, at least with the NDA government back in power. Now, the policy focus expected to be on what can be the policy focus could be on. Market veterans Porunju Elliott and even Rhythm Desai believes it's the time for investors to turn their attention towards agri space. Let's find out what is the conviction with which they are confident about this space.
I feel next 5 years is going to be a very important time for the agriculture in India. With respect to the rural stress we are going through, it's a huge challenge out there. And after the 10 years of these reforms, and people complain about the gap between the haves and have-nots have widened. It's true. So that is how the initial part of any large reform period starts. So we have gone through that. Prime Minister Modi's vision and the government's efforts have created a wonderful platform to grow much bigger.
Farm sector, it is not in good shape. Okay, our farmers account for 40% of India's workforce, and they produce all of 15% of India's output. So they are 1/5 as productive as the rest of the country. And when you have 200 million farmers who are so less productive, something needs to happen. I thought the farm laws were great, okay, but unfortunately the politics, caused them to be withdrawn. And I just hope that we get farm reforms, because if the farmers get some tailwind, then India will surprise on the upside. That's not baked into GDP, it's not baked into our market call. We're not assuming that the farm sector will do better than it has in the last 30, 40, 50 years. But it has great potential.
The next 5 years, apart from other things, I think the rural area will be real focus of this government, right? And as we have seen, Mr. Modi's track record over so many years, right? He will recognize it that is where the party has actually not done well, specifically in rural areas. And there is no denial that the purchasing power in rural areas had gone down. It was reflected into the growth of a lot of FMCG companies. It was reflected into our interaction with these kind of companies over the last 3-4 years. I think it will be a tremendous focus area in the next 4 to 5 years. And from a stock market perspective, the new winners actually could come from this sector.
Fertilizers were looking very, very interesting, and some of the farm equipment players were looking very, very interesting. So I think I would look at those kind of places. So I thought there were some interesting moves happened there, and more so, as I said, everyone's been talking about the next 100-day agenda, and definitely there seems to be a lot that this government will need to do.
Some new triggers. Defense has played out, power has played out, maybe
Shivraj Chauhan coming in, So there is a feeling that there's a lot going to happen, and I feel that these are themes that could play out in the agri space.
And well, with that, it's time to wind down in this edition of Your Trades. But before we go, we'll leave you with all the stocks that were in focus today. Over to our colleague Gaurav. Priyanka and I will take your leave. Thank you so much for tuning in.
Well, yes. Let's first talk about Exico, because we saw this stock got listed at 93 rupees yesterday, and it gave return of 78% in yesterday itself. In today's session also, this stock gained almost by 18%, and there is another news flow that Nomura Fund has actually bought 65 lakh shares in this stock. And on back of this news, we will definitely watch out for Exico in coming days as well. Next, let's talk about Titan, because Citi has now given 90 days negative catalyst watch for Titan. What they believe is that the consumer sentiments have remained subdued, and apart from that, Titan's earnings have been below consensus if you look at 3 out of the last 4 sessions. And on the back of this news, we will definitely watch out for Titan also, because if you look at the stock price, it went down almost by 3% today. Next, let's talk about some of the sugar stocks, because these are buzzing, because Maharashtra's political leader Mr. Sharad Pawar has urged the government to lift ban on sugar exports and relax limitation on ethanol blending. And on the back of this news, we saw sugar stock also buzzing in the day today. Next, let's talk about Delta Corp, because this stock actually registered a biggest gain in the last 7 years, and the reason being that there are news flows coming up which says that GST Council may quash the retro tax demand on the online gaming companies. And on back of this news, we saw this stock also gained in trade today. Last, let's talk about Exicom, because company has formed a strategic partnership with Hubject to enable the industry-leading global technology in terms of the EV charging points. This partnership will actually produce the first plug-in charge standards in India. And if you look at the company background, company had already installed almost more than 70,000 charging points. And on back of this news, this might be another breakthrough for Exicom. And on back of this news, we will definitely watch out on this company also. So on the back of the news flow, we will be watching out on all these stocks in coming days ahead, because we may see some further upside coming up in these stocks.